Welcome, everyone. Today, I have to do the updates on the markets, that being the real estate market. And if you watched my earlier video this week, I did showcase Kathy Woods for the broader economic update. Today, I'm going to talk about just some conditions of the house market, specifically also Austin. We'll go through some redfin data that it's really cool to see. If you haven't seen the report on the Wall Street Journal, I'll put it here on the screen, but massive price increases, right? All across the nation. There was one small market in Illinois. And if you know me, I do not like Illinois. I think it's a collapsing state. But there was a decrease there of around 6%. Aside from that, every other market, massive price increases, right? It is still the supply issue, not enough homes for the growing demand. Generally, there's some slight softening in the buyer confidence, if you will. People were just tired of dealing with the competition. So you are seeing some pullback, but prices are still skyrocketing. So again, when the gurus are talking about housing crashes, I don't understand what they're talking about because I just don't see it. So, but let's start here. So the first thing we want to look at, as always, is where the 10-year note is, right, and where it's been trending. Now, in the report from Kathy Wood that I sent out on Monday, or maybe it was Tuesday, we got from her, and you can find this anywhere, that the Fed is not planning to raise rates until at least 2023. Okay, so don't expect massive increases. The 10-year note is at 1.36%. What this means, typically mortgages are between 1.5 to 2% higher than the 10-year note, right? So right now you can get mortgages at 2.75 to 3.5%, depending on your situation. Those are phenomenal rates, right? Historically, over a 45 year period, the average mortgage rate is 8%. I think buyers in today's market expect 5% or lower. 6%, I think, is where we get into some risk in pricing in the market. And so we are far away from that situation, okay? All right, so that's the 10-year note. And again, you can see it kind of trending downwards. Slight increase here, but really good trends here for real estate. So when I look at markets, and this is lagging information, right? It's about a month behind, but I look at Redfin data. I can click on any state, any city. I can narrow it down by which type of product that I want to look at. So whether it be multifamily or townhouses or condos, I focus on the single families because that's really what we do. And by the way, that's where I think people are moving to, is in the single families. They want space. They want the yard. It's a Zoom world now with virtual offices. People want single families, right? They don't really want to live in an apartment complex, 800 square feet. So anyways, and basically we're just showing the trends here, right? So first I was doing, a national look. And as you can see, there's obviously no signs of slowing down here on the price increases. This is through June. And you can see across the board, everything's going up, right? Now, again, we'll go to inventory. There should be some slight increasing here in inventory. Yep, a little bit. But still, 500,000 homes is I think it's like 1/3 as much as we need. So just substantially below what we need for this to be a healthy market and balanced. Month supply. We know generally 6 months is what we need. Look at this. The downward trend is just insane, right? You're talking 1.4 months is the highest one on here, and this is Los Angeles, right? People are exiting LA left and right, and there's still only 1.4 months of supply. The market is so imbalanced right now towards demand. And this is why in our land deals, I talk about this, we have LOIs on almost all of our projects, right? Builders are scrambling for lots to build homes. There's so much demand in the market. You talk to any builder, any land developer, any real estate agent, and this has to be one, if not the hottest times to be in real estate. So there's a lot of things that you can look at here, but I want to dial in on Texas, and this is the really cool thing about Redfin. It's free, by the way, Redfin data. I encourage all my investors to look at this on a regular basis. The region we will do, that's interesting. Oh, okay. We will do, I want to do Austin across the board just for comparison, but I also want to look at a few cities, right? There's a few what I call fringe cities that I have been calling for some time that are now absolutely booming. as expected. One is Buda, and I think that's going to keep going up. Kyle is kind of close to Buda, so for now, I think we'll just do Buda. I have land deals in Lockhart, so let's pull up Lockhart, and we need to see this. By the way, I'll just say a quick little note. Lockhart has seen month over month a 21% price increase in homes, which is just, I mean, it's crazy to think about. The other thing, yesterday I was on a report again. If you know me, I pay for Zonda, very expensive, totally worth it. I get access to these monthly conference calls. And these conference calls are Zonda talking to the biggest or the 12 biggest builders in Austin. KB Homes, D.R. Horton, Lennar, Taylor Morrison, Castle Rock, all of them. And they asked them, they said, builders, where, if you're looking at your roadmap, where are you looking at next? 5 out of 12 of these builders said Lockhart. The next 3 said Bastrop number 1, number 2 is Lockhart. 8 of 12 builders are looking at Lockhart or in the southeast corridor of Austin as where the path of progress is going to come. D.R. Horton is land grabbing as much as possible right now in anticipation of that. So additionally, not that it matters too much for you unless you're in my land deals, they asked them what they expected to pay for these lots. Estimates were coming in 20 to 30% higher than we have in our pro formas. These land guys and these builders have to be in the biggest rush that they've ever had to find land. It's really phenomenal to see, really. But let's look at the data here. So look at Austin. Now, Austin is, in my opinion, it has to be near peaking. It's $600,000 is I think the low end now on the average house, and that's not a nice house. So, but you can see months of supply flat 1.1, very strong for Austin. Buda under a month, you're talking 3 weeks of supply. I mean, it's crazy. Lockhart 0.7 months, right? 2.5, 3 weeks. So a house goes on the market, a house is gone pretty quickly. And what I want to focus on also, let's get rid of Buda here. And let's look at just Lockhart, because if you know me, I'm very bullish on this area. And what I want to show you is that Lockhart is seeing a pretty substantial decrease. It was 1.1 months, now it's 0.7, right? So again, I think people are learning about what's happening there. Let's go to inventory. Right now, you can see Austin's increasing a little bit, as it should. People are definitely getting a little bit, nervous on the prices. I also want to look at month supply. Oh yes, median sales price. Look at this. I mean, you can see Austin still increasing month over month from May to June. It was about a 6% increase from what we saw in Austin. Still robust, right? You're talking, just phenomenal annualized numbers here, but it's slowing down for sure. Austin's slowing down. The prices are becoming just ridiculous for many people. So they're going to the fringe cities, as I've been calling. And you look at this right here. Look at this Lockhart jump, right? 21% in 1 month. I mean, it's kind of hard to comprehend what that means for the market, and it's damn near impossible to plan for these builders when they're seeing these price appreciation, right? So these builders, they're getting all the land, they're getting the foundations poured, and they're just waiting. They're waiting to see this price, kind of taper out like you see here in Austin before they start selling homes, right? I mean, think about this. If Lockhart now goes from $300,000 to $500,000, and builders are pricing homes at $300,000, that's a huge amount of profits if they're building out 500 homes, right? So they're very much watching these graphs, watching this data to ensure that they're optimizing their profits. So, anyways, I want to give you a deeper look into the Austin market. Nationwide, you're seeing similar trends. Obviously, it's not as volatile because it's nationwide, bigger sample size. But generally, we're seeing price increases still. We're seeing some softening, not much though. Inventory is slightly increasing, not that much though. And something to note too, keep in mind that there's already a backlog of the BlackRocks, of these boutique firms that are picking up single families. So even if they come onto the market, you have such a demand backlog to pick up these rental properties. Anything up to like $275,000, $300,000 will just be gobbled up by investors. or first-time home buyers. So overall, the market's really strong. I think, again, you're seeing some softening slightly, maybe in the luxury market for non-cash buyers, but it's a really good market, and we think this will continue for some time. So that's what I got for you today. By the way, keep an eye out. September 25th, we have an event coming up free for all my subscribers and all my listeners. So if you want more information, that will eventually be in the description of these videos. It's coming here soon, about a week or so, and you'll be able to sign up, and we'll go from there. Thanks, y'all.